late night, they ain't getting no rest. Work so hard, people think I'm obsessed. Cream at the crop, won't settle for no less. Headed to the top, remaining so focused. Yeah, gorilla of the jungle, I've been beating on my chest. I learned from the struggle, it was hard, just a test.
Hey guys, and welcome back. So today I want to talk about a position that I do have open, one that we bought in this recent dip utilizing our profits. So yesterday we talked about essentially recycling profits from certain positions back to cash and then utilizing that cash to take advantage of dips in the market. That's exactly what we did with this asset here. So we flip over to our chart. We're looking at CoreWeave here. So CoreWeave is an AI hyperscaler. Essentially what they do is they provide GPU hours to AI providers. So they are pretty essential when it comes to the growth of AI, especially domestically within the US. They're a pretty big hyperscaler in terms of their growth, and I do think they are a pretty, or will be a big player going forward. They have a lot of strategic partnerships with some pretty big names. So we're gonna kind of take a look at the chart. We'll talk a little bit about the position that we're currently in, look at some potential technical risks, and then we'll flip over to the fundamentals and do a quick deep dive in there, cover a little bit about the share price metrics, comparisons to other companies, as well as some of their more notable deals or partnerships. So first thing we see here is in this chart, we're essentially kind of just downtrending in this channel here. So you can see acting as support and resistance. We ultimately broke out of it initially, not really able to hold that, ultimately continuing the downtrend, but we are still able to break out of this primary initial downtrend here. So we start to see it really fade out, eventually finding its lows down here. So this is when I say we want to be patient. We don't want to be buying into this downtrend. I've been watching CoreWeave since it IPO'd, so we saw it kind of IPO here, rocket up almost like just insane there, like a 2x move essentially the first day it IPO'd. We don't chase things like this, especially a chart that's straight up, especially IPOs, so initial public offerings. Generally, a lot of the times they'll rip up on the first day just from all that demand from retail, trying to get in early. Ultimately though, lots of the times it does bleed back to lower targets. So after it IPO'd, rather than chasing it, chasing a 2x move in a day, I just wait patiently, wait for my technical entry. We just avoid that downtrending price action. We see price comes in, finally finds what could be a potential low, but we're still not interested down here. I need to see that uptrending price action. So where do we get that? We've got our higher low, we've got a higher high, we've got another higher low. We also have, it was that slightly lower high and lower low. So we're still not technically taking that risk, looking to build our position. We finally come back. We tagged this upsloping trend line. We're at about $39 per share, and price action is looking better. When we flip to the 4-hour, that shows you that uptrending price action. So we have here higher low, higher high, higher low, holding that support there, entering here, stop loss beneath support. So that's what I say, keep that stop loss below structural support and ride that position to the upside. So we got in at about an average price of $39 per share. I was targeting under $40 because that's what NVIDIA bought CoreWeave at. So NVIDIA invested $250 million into the IPO of CoreWeave at $40 per share. So targeting under 40 as an entrance wasn't a bad opportunity to me, in my opinion, at least to kind of get a position, get our toes in the water and see what happens. And it's worked out really well. We can see that from our $39 entry here, we're up 35% essentially, even a bit more earlier today. We did kind of wick up here to about $55. Interesting to note, we did get rejected here. It's also prior resistance in both of these candles, so I wasn't surprised to really see us get rejected here. We're also at the top of this fair value gap channel here, so that's also another potential resistance. We're quite extended on the 4-hour. If we take a look at our momentum indicators, it's a very new asset, so these indicators are just starting to kind of form themselves. Same with the moving averages. Because it's so new, we don't even have a 50 or a 200-day moving average formed yet on the chart. That's going to take some time. This is an early position. It's a new company, and it's a growth-oriented company. They're going to take on, or they have a lot of debt. Essentially, they're just leveraging their debt to kind of grow at a hyperscale. And we'll get into that more in the fundamental analysis of it. But for that reason, you know, we have to pay attention to some of the lower time frames because those indicators haven't yet really established themselves on the high time frame. So when we look at this, we start to see on the 1 hour, a bit of our bullish momentum is being lost here. We have that bearish cross of the MACD. We have a little bearish divergence on the price action. So lower highs on the RSI and MACD and higher highs on the price action. We're losing that that bullish momentum here on the DMI. Vortex looks fine for now, but we do see that negative line curling up. So if we start to see or continue to see these two converge towards each other, that's that signal there might be some near-term weakness. So when we look at that, we'll take a look at the chart. Where might be an entry, or where might be a probable place to look at an additional entry? We see this upsloping trend line here acting as support. Here we actually broke below, we gapped back up and then retested it as support, holding those higher lows and continuing up. So potentially what we're looking at, ideally we want $49 to hold. So this level here, we need this low to hold to keep that continued uptrending price action. We don't want to start seeing lower lows and lower highs. For me right now, I have a stop loss on my position at about $48.50. So just below this here, because that's that structural support of the trend right now. So if we break this, we kind of risk continued lower highs and lows. I'm going to take some profit off the table. So if we come down here and hit 48.50, you know, I'm going to take 25% off the table because I've achieved 25% returns. So I entered at $39 about here. Let's say my stop loss gets hit at 48.50. I've booked 25% profit essentially in that trade regardless. And then I'm just going to wait. I'm going to protect the rest of my position with a stop loss at entry. So it's now a risk-free trade. We would have booked profit, and best case scenario, we don't hit this level. We just continue up to these higher targets here, and we can look to continue trailing that stop loss up. That's the plan, you know, really protect those profits, and as well as kind of make that trade risk-free as soon as possible. So we've done that with a couple trades recently, yeah, and we're not sure. This SPY still uncertain, still is not showing the strength that we need. You know, no really good advancements in terms of tariffs or trade war escalation or de-escalation. So we continue kind of in this, you know, this chop solidation phase where prices just jump all over the place. You know, we're up one day, down the next day. Just really hard to kind of gauge this. So when we do make quick, really nice returns, like a 25 to 30% move. And so even then, last time we talked about this was in this video here on April 15th, that NVIDIA triple play. So I talked about NVIDIA, I talked about CoreWeave, and I talked about Core Scientific. CoreWeave is up 35% from our entry. NVIDIA is up about 13% from our entry. Core Scientific is also up about 35% from when we talked about it there on the 15th. So really good opportunities within that space, and we were able to capitalize on a few of those, and now we've got a risk-free position. We've got guaranteed 25% profit if this hits. We'll take our profits off the table, pay ourselves, move on to either looking to recycle that in at a lower price or use it on a different opportunity. So we talked about this yesterday. Either take these profits, add it to your cash position, and then redeploy it whenever it makes technical sense in the best setup. So if we're looking at CoreWeave here, you know, down here we have this buy order block. We have the previous swing high resistance. So you can see here this red zone previously acted as resistance. We broke out of it, so that's when it flips from a pivot high to a potential pivot low support. We came back, bounced from it there. So we could come back, revisit this zone again, and we see a lot of confluence of support here. So with that upsloping trend line, we've got the Lux Algo buy order block, and we've got our previous swing breakout support. And then below it, we've also got our lower time frame moving averages. Worst case scenario, we could come back to this lower region in the Lux Algo fair value gap channel. There's a confluence of support down here as well. You can see VRVP point of control. We've got the lower band of the Lux Algo fair value gap channel. We do have a buy order block down here at about $40.50. We've got our Fibonacci golden zone here marked in yellow, and we've got another previous swing high zone that could be retested. So lots of confluence. You know, the near term entry for kind of a more aggressive swing trade, you might be looking at $48. For me personally, I'm not taking that position there. I have my stop loss at $48.50. So if we come down to here, I'm actually taking profit off the table, not really looking at buying into this. I'm looking for more of a substantial retracement down here into the mid to low 40s with confluence of this really high value zone here. That's going to be where I might look to add to my position, or just cycle the profits back in. So take 25% off the table here, cycle it back in down here in the low 40s, and look to rinse and repeat that process. So just following that. But in terms of the indicators, you know, we're looking a little bit overextended on the low time frame. We are getting a few bearish divergences on that low time frame, and we aren't getting the strength in kind of the SPY that we really want to see. So I just have to recognize there could be potential near-term downside, and we want to book profits and make this a risk-free trade. So that's what we've done. Stop loss in place, in profit. We've got a plan. You know, if we break below this level, then we're just going to have to reevaluate and potentially look to buy down here. Otherwise, we just get to continue on our merry way, riding this risk-free trade to the upside. That is the most ideal scenario, and I hope that plays out. So that's it for the chart update on CoreWeave for now. Let's take a really quick look at the fundamental analysis here. So a few metrics: stock price currently, you know, 52.56 now. This is I wrote this up, you know, an hour or two ago, so it's a little bit old. Market cap at 20 billion here. Enterprise value at about 30 billion. Price to sales ratio 10.6. So it's a little high, but they are scaling their revenue up aggressively. They had a 736% revenue growth year over year from 2023 to 2024, and we're supposed, if they do reach their projected revenue for 2025, we're looking at another 400% increase from 2025 over 2024. So massive revenue growth. Net income is net income negative. They aren't really profitable right now because they're investing so much money into growing. They're a newer company. They really want to scale their operations. So it's a lot of investment right now. That's why I consider this a more higher risk investment when it comes to AI infrastructure hyperscalers. They're the newer kid on the block. They're focused on GPU hours, so they have more GPU concentration than some of their peers. They're a lot smaller than some of the major AI providers, you know, like Amazon, Microsoft, other major companies like that. So the big selling point for them is they have a massive backlog of GPU contracts. They've got that huge concentration of GPU hours. So with AI, the GPUs are really kind of the preferred chips for that AI HPC compute. We will continue to hopefully see that demand grow. We see their gross margin here at 74%, operating margin about 17%, profit margin, again, they're not profitable right now. That being said, we will kind of hopefully start to see this shift in the future as they keep bringing on more and more customers. As I said, they have a massive backlog of contracts to the tune of $27 billion. So they definitely have the contracts, but it's a lot of CapEx cost initially to really fund this kind of development. So not really surprised to see that. Their debt to equity is quite high just because, you know, taking on a lot of debt to grow so aggressively, not surprised to see it. Current ratio is a little bit low because their debt is high and they have a little bit less current cash flow. So minus almost 6 billion in free cash flow. They've got 2.75 billion of operating cash flow, and then their CapEx here, that almost $9 billion investment into the data center development. So just keep that in mind. You know, from a fiscal sense, a financial sense, there is some risk because they're very leveraged, because they're taking on debt to expand, but they do have major projects, major partnerships, a lot of revenues, a lot of backlog. So I expect CoreWeave to be able to navigate this. successfully. We'll continue following though, and again, just keep in mind with a grain of salt, they're newer, it's a growth company, it's tech, it's more speculative, so just be aware of that, be aware of the volatility. You know, it is going to be there. That's why we've protected our position so quickly. So this is a risk-free trade for me now. Worst case that happens, you know, I only get 25% profit, and then I stop out my position at a lower price than what I initially hoped for. But looking at analyst consensus here, it is a strong buy across 7 analysts. So these are the analysts here. Basically average price target 48.71, so actually lower than the current price. You know, so if I stop out at 48.50 and the average analyst price target is 48.71, you know, not the worst place to stop out in my opinion. You know, you're hitting the price target there, but we do have that price target range coming up to even topping out at $55. Analysts are a lot more conservative as well. So again, it's something we keep with a grain of, or keep in mind with a grain of salt. Growth outlook, we're looking at 62% 3-year CAGR versus the 21% for a traditional cloud IaaS market. You know, we're also looking at $8 to $10.3 billion in revenue for 2025. So that's that 4 to 5x growth year over year. Some notes from the analysts: Bank of America considers them an AI data center leader. We see MoffettNathanson signaling 3x market growth. We see Needham, Mizuho saying that they're neutral due to GPU supply demand risks. So a lot of people are stating that kind of the GPU supply demand is being overstated. That being said, I think domestic GPUs are really going to be favored, especially with the ongoing tensions between the US and China. So basically every country is going to look to increase their domestic AI infrastructure. That's why I started looking at this NVIDIA triple play, NVIDIA, CoreWeave, and Core Scientific, as 3 companies devoted to really investing a lot of money into the AI data center space within the United States. So that's kind of my selling point there. So why I really like them as you know, a high growth, higher risk, but large potential investment here. There is some worries about their Microsoft deal. A lot of their concentration of their customers is with Microsoft, but we'll talk about it later. You know, we are seeing OpenAI come in, Meta as a partner. So just because Microsoft says they're slowing down their investment a little bit in AI infrastructure doesn't mean that there aren't other players out there ready to scoop up those megawatts. That's exactly what happened. We saw Microsoft here they essentially terminated some of their agreements, partially due to delivery issues. They also stated they just believed that it might have been too overvalued at the time. You know, basically Core Scientific or CoreWeave denied the cancellation, saying no actual contract cancellations or walking away from commitments, but they did have an additional $12 billion option with CoreWeave, and they declined that. But this is where I say if they decline it, someone else is going to come in and pick that up. And look what happened. OpenAI discovers that. They come in and they just replace Microsoft. They want to be the biggest AI company in the world, and they're really focusing on capturing that data center concentration. So we see Microsoft step away, and then OpenAI comes in and takes that deal over. Same thing, we see Meta is a partner with CoreWeave. You know, and they've also reiterated that they're increasing their CapEx spend on AI infrastructure. So Microsoft continues to be CoreWeave's largest customer, significant ongoing contracts, 15.1 billion of their remaining performance obligations suggest a pretty strong backlog. So they have a $27 billion backlog total, 15 billion of that from Microsoft. So they are heavily dependent on Microsoft for now, with an average contract length of 4 years. That being said, if Microsoft continues to step away, we've seen OpenAI come in, pick up that infrastructure. I would expect other companies to do the same. So it's just going to really depend going forward. Who is that customer? I'll actually go down here right now and show you some of their other customers. So OpenAI, that $12 billion replacement. They also acquired a 350 mil stake in the IPO. So OpenAI and NVIDIA both backing CoreWeave. We see NVIDIA, key supplier and investor, providing their GPUs. So that's another benefit to CoreWeave. They're a preferred customer of NVIDIA. They have So they basically get better access, better deals for all these GPUs, and really kind of allows them to scale more aggressively, faster, and get these GPUs online. We see Meta Platforms is now a significant customer, 15% of 2024 revenue, with another unnamed customer here. And Dell Technologies partnered to optimize data center design with their server tech, and we see this acquisition of weights and biases to enhance their AI platform. So lots of major partnerships here with some of the biggest companies in the world. So I definitely don't think CoreWeave is one to be fading right now. When you've got NVIDIA backing them, you've got OpenAI backing them, you've got Microsoft, OpenAI, and Meta all using them as data center providers, and you've got Dell Technology here's partnering with them to provide that server tech for those AI workloads. So really impressive partnerships there for CoreWeave. Just a basic breakdown of their fundamentals. They operate 32 data centers in the US right now with over 250,000 GPUs. They deliver 70 to 80% utilization versus a traditional hyperscaler's 30 to 50%. So a vastly better performance from CoreWeave here. They've got early access to those NVIDIA chips via their partnership. They've got a $27 billion backlog with major players like Microsoft, OpenAI, NVIDIA, Meta, those huge companies. $8 billion in 2025 in revenue, representing that 316% growth. We see Microsoft's needs here. In the short term, this is where, this is where CoreWeave still kind of has that advantage over Microsoft. In the near term, they do rely on CoreWeave for AI workloads. That being said, kind of in the future, with their Azure, with Microsoft Azure, then they might be able to reduce that long-term GPU dependence, but the immediate needs are not reduced yet, so they still rely on CoreWeave for that. And also, if they reduce their need, I said just other companies are going to come in, pick up that infrastructure. They are a key partner despite the cancellations, so they still are, still a major customer of Microsoft and CoreWeave there. So even though they've reduced their exposure and not taken that additional deal, they're still a major player, still a major customer. And we also see OpenAI and Meta's CapEx increase kind of replace that role in their balance sheet. Risks here, customer concentration, that's coming down as we bring on more and more customers and reduce that concentration in Microsoft. The major other one is just their debt. Again, they want to build, and they want to build fast and large, so it's going to take a lot of money, a lot of investment, but that kind of with that investment comes a lot of future revenue. So we're trying to look at opportunities to get our foot in the door, start building a position on what could be one of the bigger domestic AI data center providers, or one of the stronger US hyperscalers when it comes to AI infrastructure. So CoreWeave definitely strikes that niche for me. We can do a little conclusion here. Basically, their fundamentals showing explosive growth, strong AI infrastructure niche being filled, a vast amount of GPUs, more than the direct peers. They've got a higher utilization rate, outperforming the hyperscalers. A relatively decent market cap for its enterprise value, a little bit high in terms of share price valuations when factoring debt and everything, but that's because it's such a hyper growth focused company. So continue to keep that in mind. High debt, customer concentration are risks, but we've addressed those. Compared to other hyperscalers, obviously compared to AWS, Azure, and Google Cloud, they're a lot smaller. They focus primarily on GPUs, and they're focusing on that AI infrastructure and really that huge hyper growth. Essentially against smaller players like Lambda here and Nebius, they offer kind of diversification but less GPU exposure. So CoreWeave is kind of the big dog when it comes to GPU power providers within the US. They've got massive growth planned. They've got huge partnerships with some of the biggest companies in the world, and I think the future's bright for them. I'm going to continue looking to build my position, and hopefully, if all goes well, we continue to see AI really pushing the boundaries, and we'll see CoreWeave really showing the fruits of this investment. So if you learned something new, please like, share, subscribe. It all means the world to me, and I'll see you guys in the next one.